Welcome to Infinity Capital, everyone. My name is Raj. So, I'll be starting a series called Bottom Picking, wherein we'll be picking stocks which are almost at their bottom or they've corrected a lot, and we try to find some value in these stocks. So, we will do a fundamental analysis as well as some financial analysis, a brief overview to understand if we can make a short term investment in these stocks and make money. So, today we are going to talk about Z Entertainment Limited. So, I'm sure everybody's heard about Z channel on TV. So, it's a broadcasting company. They have channels on on your TV, and they have multilingual channels. So they have it spread all across India. They have Marathi, Gujarati, and all the regional languages. It's a very well-known, sort of media company throughout India. The company was earlier managed by Subhash Chandra. Then there were some financial problems with the company, and so he had to sort of step away from his chairman position. So that is what happened, and because of that, there was a lot of uncertainty regarding the company, and the stock crashed. So, if you do an overview, the company was established in 1982. Okay, so they are into the business of broadcast. They have digital business also. They have an OTT platform also. They have rights for music and movies as well. They produce movies as well. They have international channels as well. They have presence in 170 countries. So they have around 46 domestic channels. So they have quite a huge market share, 36% market share in the Indian television market. Okay. Their revenues come through advertisement, through subscription, and other services. So it's their regular broadcasting business. So they are broadcasting in 11 languages. All right. Then they have the digital business wherein they have this Z5, which is the OTT platform. So OTT is in vogue right now. So this is their OTT platform. They have a movie production house as well. They have a music business. They have a music publishing company, and then they have made some investments on the side in some other technology companies. So basically, so Zeel is the flagship company of SL Group, and they had some debt of around 11,000 crores, and the promoter had pledged their shares, and then so there it was basically the pledge was divested, the stake was divested, and now they own only 4% in the company. So Subhash Chandra had to quit the firm, he had to step out. So this is what has happened, but that's in the past. Now that is behind us, let's see who are the major shareholders in the company. So if you'll see, FIIs hold 64%, mutual funds hold around 4%, promoters 4%. So this is the current mix. And in the FII, if you'll see, there are some very big names in the FII. So there is Invesco Oppenheimer Developing Markets Fund. It's a very big mutual fund. Vanguard. Okay. So Global Pension Fund. It's a very big fund. Government of Singapore. Vanguard. Again, Vanguard, HSBC Global Investment, LIC, HDFC Life Insurance, SBI. Some very big names are holding these stocks, and foreign companies. You have a global China fund owns 10% of this company. So these are some very marquee names are holding this stock right now. So I'm sure they see some sort of value in this stock to hold this stock. So let's do some analysis. It's a 22,000 crore market cap company, so it's a mid cap company. All right, they generated 1,548 crores of cash flow from operations last year, which is very good. And it seems that they've even trimmed their debt, so it's a debt-free company right now. Okay, they have around 1,000 crores of cash on the book. All right, they have around 798 crores of investments. Overall, this looks pretty good. From a brief overview, the balance sheet looks pretty good, pretty strong. So the sales are good. They're pretty much flat since the past 3 years, but they've managed to increase their profits as compared to last year. Although there has been a substantial decrease in profits as compared to March 2017. However, their profits have increased as compared to last year. On a quarter-on-quarter basis, you will see that the March numbers are also pretty good. Last year they posted losses. This year, they are in profits. December numbers were pretty encouraging too. So these two quarters have shown good growth. That is the reason I started monitoring the stock. From a PE perspective, the median PE is around 23. Stock is trading at a PE of around 26. So it's not overvalued, in my opinion. Let's do a technical analysis check. If you notice, the stock is actually trading around its IPO price. So the stock basically fell. The stock fell around 82%. And this is usually what happens if there is ever a problem in the stock, a company with regards to debt, or the promoter has pledged shares and then there is some problem. This can happen with the stock. So one has to be careful in these companies. Whenever you see a promoter has pledged a significant amount of its stock, you have to be careful. So what now? Like, why should we look at it now? So see the volumes over here. These volume level bars are massive. So against 201 million monthly volume, there is 920 million volume happening here. So it's pretty sure that people are accumulating this stock. It is the funds, the institutions, global pension funds, the ones that we were talking about in the previous slide. So these guys are accumulating this stock. So like what sort of entry level do we have here? So this was the COVID bottom, and then the stock is basically consolidating in this 30% range. So what is the trade? The idea is basically this is the range we can buy the stock within this range between 200 and 240, 250, between 230 and 200. This is the range that we can accumulate the stock in. And if the earnings keep coming on a higher clip, we can see a very quick up move in this stock, because market Nifty sort of bottomed out and it has gone up pretty significantly, but nothing much has happened here. So whenever we see better earnings coming in, this stock can just go up pretty quickly. So this can shoot up 100-200% very easily. There is inherent risk in this stock because currently there is not much promoter stake in the company, so the company could be directionless. In terms of the institutions may have to appoint a good chairman, director, or a CEO to manage the business. So whenever if you may hear in the future about a good CEO taking over the business, that is when we can see a good run up in this stock. However, from a technical point of view, this looks pretty strong, and this is a good point to accumulate this stock. According to me, my analysis, this is ready to take off. So the holding time should be around 6 to 9 months, and we can see a good 100%, 150% upside in this stock. So this is the analysis from the bottom picking series, guys. This is not a buy-sell recommendation. This video is for educational purposes only. So please consult your financial advisor before buying or selling any shares. Thanks a lot, guys.